Hey everyone, what's up? This is Mozart. So the correction is still ongoing. Basically, not much has changed. The price has dropped just another 3%, and it's dropped at its peak. Right now, we are sitting at the liquidity level. There are two main liquidity points in the sideways movement. By the way, this is what I'm looking at. This is the 4-hour chart, and I posted both of these levels in the Telegram channel. So that's the second level, $93,000 to $94,000. It's not as well traded and not as liquid as the upper level that we lost, $97,000 to $98,000, but it's also not so weak. And judging by the density, it's something closer to the region of 250 to 300,000 bitcoins. And the upper level is already approaching to 400 to 500,000 bitcoins. So what's the situation here? I'll just say it right off the bat, and I don't like this. There are some external narratives that I don't like either, and it's not the best video that you'd like to hear from me, but today I have to say this. And I'll point out that it relates more to the short term, what might happen in the next few days, not months. So if you're only trading for the medium term, this doesn't really affect you at all. Basically, you only have monthly trades planned for a month ahead, but this forecast won't have any impact. So the first point, this is the amount of volume transferred from short-term holders to losses on the exchange. And right now I'm looking at it on a daily basis, but also averaging how much was transferred per hour over the day. And we can see that during this entire decline, they were transferring about 1,200 on average. And at the peak, that's 1,250 bitcoins per hour. This corresponds to the overall failures and local dips after Trump's victory. However, this indicator is pretty sticky because it usually likes to reverse markets through convergence. You can call it bullish divergence, doesn't make any difference, but more often it works like that. So, for example, we're drawing the bottom. It was recently, and we're just slightly updating it, given that the indicator is also showing a new peak below the previous one. Here we have the first peak after the correction. After the correction, the price rises again, indicating an upward trend. But now we see a downward pattern. And this is totally similar to what happened at the end of October and the beginning of November, where we drew a peak, then the bottom, updated the bottom, and the next peak was below the previous one. And then, boom, and we surged. The selling pressure is coming to an end, and the lower the next peak, with a lower price decline, the less selling pressure there is on the market, on the price. So that means that the sellers dry up and the buyers enter the game. The price reverses, and right now we're only seeing the first peak that makes me feel a bit uneasy. Yeah, most likely it's looking like some kind of bounce heading somewhere, and I totally think we might even test it back. This range, this area around $97,000 to $98,000. This is where we took from. But we need to draw the second peak, and the chances are opening up. The second peak that must cover the first one. This drop is heading somewhere around 90 to 91, and maybe even up to here, to the marks of $88,000 to $87,000. Unfortunately, every day there are more and more as we stay in the current range. I'll explain it further. That's the first point. And the second point, it's the total supply loss by short-term holders of all the coins. And just to remind you, short-term holders are all the people who hold their bitcoins for up to 155 days. So it's currently at 50%. And 50% is usually a critical point anywhere in any bull markets. When it comes to a further drop, if this level isn't held. And in bear markets, it's the opposite, from top to bottom, from the perspective of further growth, if the bears can't hold this level. 55%. So we recently dropped to a loss of 57%, and now we're almost back to that point. For example, January peak corrections of 2024. We tested this line once, after which we went higher, and now we are approaching it for the third time, and that's already the third time. That's quite a lot. So if we don't hold this line, there was even actually an attempt after the Iranian attack. There was an attempt, but they couldn't do it. They couldn't hold it, and they went further down. So if we don't hold it now, that's going to be a bad signal for a return somewhere around the levels to close the gaps at $87,000 to $88,000. The same thing works and has worked in previous cycles. Basically, in the 2021 cycle, we hardly ever came close to that level at all. The 50% loss was only right here, but that wasn't a bull market yet. That was a consolidation period. It was September, October 2020, and it was also fall. Next one correction was roughly in the zone during the drop. By the way, right now, the Ethereum looks very similar to the structure in September, October 2021, after which we moved higher. The same goes for 2017. Here we broke through deeper, but we usually only break this line once because the volatility was higher here. There were 3 main corrections. And after that, we broke through here. We turned into a bear market. So right now, there are some edges, which is why the indicator can't go much higher, because that's when the next moment starts to form. So what are the next moments? Well, here's the chart that I show you quite often. This is the average price for new Bitcoin holders who bought their coins within the range of 1 week to 1 month ago. And now their average entry point is about $98,000. So that's roughly the maximum level of consolidation. We tried to break out on January the 6th. It was a good attempt, but the environment with these jolts, with the sharply increased risks and with the new surge in inflation, all of this fell back down, unfortunately. Unfortunately, we couldn't hold the price, although the chance was quite good. Once again, we fell down, and the longer we stay down here, the more stress these buyers are feeling. They bought a lot over the last month, and they are starting to sell off. What you can basically see from this indicator, how actively they're starting to shift. And that's additional pressure on the market. The first line doesn't hold the line in the upper cohort. So then the support of the next cohort comes into play. And this is already from 1 to 3 months. So more emotionally stable people who improve their buying strategy, who can hold onto their Bitcoins longer. So right now, this line is around the mark of about $89,000 to $90,000. Roughly speaking, if we don't shoot up right now at least to 97 or 98, we are going to head towards that line. Let's go ahead and test that at least $90,000. This probability has now increased compared to just a couple of days ago before the JOLTS report. Right now, it's significantly higher. For example, in January 2024, I'm going to remove everything that's older than 1 month. For now, we tested that line just once. We tested it with just one touch. After that, the market turned around, although we were still quite far from ATH. Then right now, we're already at ATH, and there is just a small distance left to that line. The same goes for 2021 cycle, and it was already strong during that cycle. There wasn't a single touch here, just right here before the Chinese ban. Same thing happened in September, October, fall of 2020, and that during the bull run of 2016 to 2017, we touched that line literally twice, 1, 2, and that's it. Out of the 3 main corrections, or even 4, we only touched it twice, and now we are approaching it again, and this is already a line. You could say there is support indicating a bearish market. So if we drop below that, we could see that again as in 2021, but we haven't reached that yet. So if we drop below that, we could repeat that scenario, that what happened in 2021. Unfortunately, but now we haven't even reached that point yet. There is no need to panic just yet. For now, we are struggling with the line from the 1 month holders, although they're definitely selling off. It's obvious. Next, the net loss in our system at the moment exceeded, and I'm also averaging it out over 3 hours on the hourly chart. On average, they were selling a loss of $52 million per hour. Then right here, by the way, we have a little convergence, a new low, but the loss is already smaller. So the selling pressure locally right within the span of an hour is coming to an end. This is actually hinting that we might see a bounce at least at this level, $96,000 to $98,000 over there. Basically, these losses are pretty small and they should be within the bounds of a bull market. That is, they happen, but they don't pass some boundaries. So there, and there. But they don't cross serious boundaries. So right here, it's already a bit of a gray area. Doesn't smell like a bull market here if we drop significantly lower right now. Next, it's the cost basis bands. So here I'm taking the average purchase price from this indicator, but not by individual categories. There is 1 month, 1 week, or 1 month, 3 months, or 3 months, 6 months. I'm taking all the short-termers. This is basically from 1 hour to 6 months, up to 155 days. And their average price is currently about the same as the average purchase price for the 1 to 3 month cohort, a little lower. If those are 9,000, then these are $88,000. And again, in 2024, we almost touched it and then rose. And once below, it risks sideways movement. Like last summer, once we cross and stay below it, especially like here, it threatens to turn into prolonged sideways movement, just like it was last summer and fall. I mean, we might touch and bounce back, but that's the worst case scenario. And if we drop lower, that's it. There will be pressure from the entire cohort of short-term holders. Which, by the way, if we look now, the volume H band is already below 40% of all holders of active exchange offerings of Bitcoin. And they will put a lot of pressure on the market trying to at least break even. So we cannot drop lower for a bull market. And in the bull market of 2021, that scenario was completely ruled out. There was an extremely strong bullish candle. I mean the annual candle. Here, just last fall, we were hanging around the average buying line for short-term holders. Well, and in the cycle of 2017, we broke through it too, like twice. And it wasn't even over days. We probably broke through on the hourly chart. And we surged from there. But again, then volatility was absolutely different. There were less money in the market and it allowed for more movement. And for Bitcoin, corrections of 30 to 40% were normal corrections. Now, a 20% drop is a disastrous. Over 15%, that's already too much. Now we've dropped 10% since the JOLTS report. And that's already a lot from some local correction. Well, this is it about blockchain here. I shared some of my warnings overall, and we've reached a critical level for the shortest term holders. If we can't hold this level, we are going to drop lower to the next level, which is also there. It's in the range, considering all the spikes and the noise that could happen and the liquidations, it's roughly in the range of $86,000 to $89,000, somewhere over there. We're going to head towards it and start trying to bounce off. So it's important to understand this, and all these indicators that I'm showing are also on the edge. They're holding for now, but these are the last levels that are keeping the price up. We need to make some kind of decision for buyers. If we want to see a continued bullish market like this, we need to get out. We either need to get out at the current prices or drop down to 87 and shoot out of there really quickly, really fast. And it's going to come down to the hours now. So now it's the same on the chart. Here is the 4-hour chart. And what I don't like here, that was a good attempt right here to get out. And the candle was strong, like really, really strong, a good candle. There was an attempt, but they couldn't do it. And everyone got absorbed by the jolts and they traded around that 200 moving average. And it was fine. They broke out as the standard in most bull markets, but they couldn't hold it and went through again. Moreover, this is much lower than 200 moving. So I don't like this. Again, from experience, from statistics, I can say that more often than not, such structures work out either like this or they work out like this with retest. This is what happened more often. And this kind of a cut, well, it's so unpleasant. For the trading moving to go beyond it on volume and return on an even larger volume, well, this is a problem, to be honest. But I'm not saying we're definitely going to hit 88. I'll say it again, the likelihood of that happening is higher now than it was back on January the 6th, before the JOLTS publication. So, the daily chart. Again, we dropped below that 50-day moving average, continuing with this sideways movement, which is not so good. I don't really like it. So the likelihood of revisiting those initial lows is really high right now. With a spike somewhere around here, there is a high chance of revisit. It's just a heads up. It could be like that. Don't be worried if that happens, especially if you have medium-term positions. If there isn't a proper bounce from here, then it's almost guaranteed to come from this point. So that's the thing about our charts. Yeah, it's a bit concerning. We couldn't test this S3, it was normal last month. And once it get tested on the bull market, here S3, it is somewhere in the region of 88. At least now, before Trump's inauguration, there is a high probability of that. Just now, it looks like it might go there. So keep in mind. And all the current trades ideas, entry, exit points, and adjustments, I share everything in the Telegram channel. So regarding Ethereum, there was a decent trade. We made a good profit before the drop, and I'm waiting to average down there. There will be new trades. You can find the link in the description below, because I don't share these trades on YouTube. And now that's all I wanted to say. I wish us all good luck. And this was Mozart signing off. Have a great day, everyone, and goodbye.